Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are Thursday, May the 29th, 2025, recording this in the morning. So I guess we all saw the news that basically a US Court of International Trade has essentially deemed it illegal for a lot of Trump's tariffs. So just sort of the technical framework of this, there was a law which is sort of the IEEPA. It's a certain kind of provision which dates back to 1977, which does give the US sort of president the power in sort of an emergency situation to impose tariffs. But the key thing to remember is that in the United States system, the imposition of tariffs is very complicated. And although Trump likes to take his big pen and just sort of sign executive orders, the reality is that all of the tariffs which have been imposed are done so using a specific within a legal framework and a legal justification. So some of them have been in this sort of emergency sort of law, which is the IEEPA. Others are kind of for different sectors. So there's a section 232, there's a section 201, there's various different sectors of unfair trade policies. But the basic point is that there needs to be a sort of a legal reason for tariffs. Otherwise, there's all kind of conditions that, maybe they can be imposed for 150 days and then they need to be confirmed and ratified by the Congress. So what Trump has done, and his advisors are probably a little bit foolish here, is to sort of put tariffs on which don't have full legal justification, or at least to this sort of Court of International Trade. Now, the Trump administration has already appealed, of course, and this will probably go pretty quickly up to the federal division and then even probably all the way to the Supreme Court. So it would not surprise me if the Supreme Court will be ruling on this particular situation, maybe within, a few weeks or 6 weeks, something like that. Who knows how fast they can move. So the point is, at the very minimum, technically, so what this means is not that all tariffs have been removed, but it means that all tariffs which were instituted or imposed under the aegis of this sort of law, the IEEPA kind of law, they are technically now deemed illegal and can no longer sort of operate. The whole question of whether the tariffs are already paid, need to be repaid, is a complete legal mess. It's going to take weeks and weeks to sort out. So what we've got here, I've just got a little sort of chart here, basically saying that just gives you a sense of sort of the different sort of structures here. So we've seen that a lot of the stuff on China is actually under Section 301. Certain things of China and Hong Kong, this is the ones in question. So anything in the blue in question here are the ones which this Court of International Trade has just yesterday deemed sort of null and void for the time being. Now, as I say, so what you can see is that, a lot of tariffs are still in place. And of course, with the appeals process, it's quite possible that the administration will actually win, although that's probably going to take at least at a minimum several weeks. And then possibly, he'll have the legal all clear. So it's not as though we can just take a simplistic view of this and say, oh, there's no longer going to be any tariffs. I think the key takeaway is to say that certain tariffs have been temporarily halted. There are many legal avenues available for redress for the Trump administration, so they might actually have their decision overturned. And the third thing as well is that instead of using this IEEPA as a justification for tariffs, what Trump's team can do now is to basically look at all the different sectors and use different sort of other legal sort of statutes like Section 232 or Section 201 and sort of start putting different sort of sectors or companies in that legal framework. But what we do have is definitely less tariffs and I'd say a lot of uncertainty. So if we just look at the market reaction, it's actually quite interesting because on the immediate market reaction, which was last night, we did get a huge kind of risk on, and we can see here that the ES just looking here on the S&P mini futures, you see they spiked up. But as you can see, this is on the daily chart. They've actually given quite a lot back. And that's similar everywhere. We see that NASDAQ had a big push higher, but also sort of gave back a little bit. If we look at, let's say, the bond market as well, just sort of quickly, let's look at something like maybe just the 10-year. You can see that went down in price, but it's given it back. And then just finally, if you look at something like oil, you can see that also had a pop on this sort of pro-growth story and gave it back. And then if we look over at, let's say, just the currencies, we can look at the dollar index just as a broad index here. You see that's up a lot. But if you actually look on the, actually you can see it's down. So it popped higher, then it's actually given it back is my point. So if you look, let's say, against the JPY, you see there was an initial pop, which was reversed. And against the euro, for example, the euro dropped and then reversed. So I think what's happened is that the market, the knee-jerk reaction was was to say what? Was to basically say this is pro-growth. We're going to have less tariffs. This is a good situation. Trump is finally being sort of reined in by the legal authorities and on his executive actions. So therefore, it was good for sort of risk-on assets, good for the dollar, and all of those sort of tariff sort of trades were essentially unwound. But as you can see here in the last few hours overnight in the European session, a lot of this stuff has actually sort of attenuated a little bit. So I think what's happened is that the market has understood that actually this creates even more uncertainty because there's going to be legal challenges going on, as I said, for weeks and weeks and weeks and weeks. A lot of tariffs still remain in place. And the other possibility is that instead of using the IEEPA kind of sort of legal framework, Trump's team might just simply kind of actually start using other sort of legal frameworks to justify the imposition of tariffs. And who knows, maybe this will sort of upsets Trump sort of anger. This will anger Trump, and maybe he'll double down on tariffs. And it's interesting that we saw yesterday a journalist asked in a white in a Oval Office kind of press conference Trump about the famous taco trade. Trump always chickens out. So Trump has no courage and always gives a lot of sort of a compromise. Trump did not like that journalist at all, who, by the way, was very brave asking that question. And Trump called it a nasty question, a nasty, nasty question. And so the point is that remember that Trump has a mercurial character and a very large ego. And it's possible that if people start poking him, poking the bear, and saying that he is gutless and has no sort of courage, and it's the taco trade, and also the fact that this court has sort of blocked some of his tariffs. Who knows? We could get some sort of irrational kind of response. It could be a more aggressive tariff reaction. I don't know. That's all in the realms of psychology. But it's just to say that we absolutely cannot say this morning that all tariffs have been removed and it's back to the status quo. Having said that, so let's keep an eye and see what happens, because there's a couple of other things going on. And so just if the general picture here, I mean, one way of looking at that is to say that, there's going to be higher growth, the risk on, therefore potentially, sticky inflation, which is going to make it more difficult for the Fed to cut. So that's one way of looking at it. If we also go with that narrative, we can say this is going to be bad for the long end of the curve. And if we look at, let's say like the ZB here, so the futures here on the 30-year, you can see that is trading along lows, although off its worst levels. So you could say that, maybe that's not going to be good for the long end as well. On the other hand, another way of looking at it is to say that, we could have maybe less inflation because there's less inflation caused by tariffs, and that could make the Fed a little more dovish, which would be supportive. So that's interesting as well. The other issue as well, of course, is that in theory there will be less income from tariffs. So just like what tariffs do is to bring in income, of course, and so this also sort of upsets the equation or the balance of the Reconciliation Act, like that sort of mini budget which is currently going through Congress. And so if you remember that the tax cuts are going to be extended, that's sort of the plan. And we saw yesterday that Elon Musk officially kind of recused himself from serving in the US government, and he's going back to running his businesses. And essentially, Musk's parting shot was to say that, savings weren't as deep as he had hoped for. So the idea here is that, the current kind of reconciliation sort of budget bill is not going to have very deep cuts. But what we will have is the tax cuts are going to continue, will continue. And you say, well, who's going to pay for that? And Trump's whole logic was to say that the economy is going to grow, and secondly, there'd be quite a lot of income from tariffs. But now, if we have less income from tariffs, does that mean that actually the market, in terms of the long-term bond market, is actually going to start saying, well, hold on, we're getting all this sort of extra sort of costs and everything, but not much tariff income, and therefore more bond issuance, which is bad for balancing the budget, which is not good for the long end of the curve. So there's quite a few interesting things to look out for here. Now, the other thing to look out for is the Fed. I'm just going to grab some tea. Excuse me for that. I do apologize. But let's go and have a look. So we had the Fed minutes yesterday. Now, this is an old meeting when I say an old meeting, this is from the last meeting, which was in May. And of course, a lot's happened since then. So at that point, The Fed thought that there was going to be sort of very high level of tariffs. Subsequently, we had the sort of the deal between the US and China, the interim deal. And of course, we just had this decision last night. But what is interesting is that on the back of all of this, the market has fairly, I'd say quite aggressively in a hawkish way repriced Fed expectations. So the one which we always like to look at is this end of December. And you can, if you remember, this was up to four cuts. We had that down to four cuts, 100 basis points of cuts, as little as, I don't know, 4, 5, 6 weeks ago. We're now down to 1.7 cuts, which equates just to 44 basis points of cuts by the end of the year. So one and a half, 1 3/4 cuts. And this has come down, if we just look at an intraday chart here, so a pretty short-term chart going back about 6 or 7 days. This number on the right-hand side here, on the y-axis on the right, this represents the number of basis points. So remember that one cut is 25 basis points. So going back to the 16th of May, about 13 days ago, we were at about 2.5 cuts, and subsequent to that, the data has still been relatively strong. Inflation remains relatively sticky, and there's still a lot of uncertainty. So the market has decided, also on the back of maybe the FOMC minutes yesterday, which, although outdated, were certainly painting a picture of an FOMC which is very concerned about inflation, which is very concerned about tariffs, and which is very sort of cognizant of the fact that there's a lot of uncertainty, and absolutely are going to be data dependent, and absolutely are going to be patient. And as all the Fed speakers are saying, echoing what we had in the minutes, there's absolutely no hurry to cut rates. And so the market has taken note of that. And now we're at only, as I said, 44 basis points. So the further up this goes is less and less cuts. So again, this is negative value here. So this represents the number of cuts in basis points. So could we get to a situation where the market, and that's what's going to be interesting today in terms of the short-term interest rates, the stirs, like the SOFRs and whatnot, is to say, well, there's two ways of interpreting this, is to say, well, as I just said, is that there's potentially less tariffs, maybe less inflationary effects that will make the Fed more comfortable, and maybe this 1.77 cuts will go back up to 2. On the other hand, will the market say, well, okay, less tariffs, stocks are going to rip. This is good for animal spirits, more global trade. Inflation will remain sticky, in which case maybe this number is going to go down to 1.5 or 1. I'm going to be absolutely honest and say I'm not exactly sure what is the highest probability way of interpreting that. What we have to do, I think, is just to look at sort of asset prices today and just see generally how the market is digesting it. And as I said, just looking at what's happened overnight on that initial euphoria has basically faded a little bit, and the market, I think, now is being a little bit more circumspect. What we did get, though, after the bell last night, we did get the Nvidia earnings. Now they were very, very good. If we just go to Nvidia here, there was just let's just quickly pop in the ticker. So as you can see in the pre-market here, trading up from 134 to 141, the options implied move was about 6% from memory. So you can see here that just from the close up until where we're trading, it's up at about sort of 5%. So, the market is rewarding Nvidia. They had very, very good metrics, a lot of future demand, everything basically very, very rosy. The Blackwell architecture very, very much in demand. The main issue is China and sort of the administrative situation, in the sense that they've been prevented from selling their most sophisticated chips to China because of export controls. They said on the call that they are working towards finding some kind of compromise that they can sell very, very sophisticated chips, but maybe not the most sophisticated or sensitive ones. But what was revealed, though, is that they estimate that they've lost about $8 billion of revenue because of those export curbs. So very, very significant loss in revenue. But despite that, they still achieved fantastic results. And, as we see here in the pre-market, Nvidia is up and quite possibly is going to retest its highs up towards 150 or so over the next few days. But so the question here is that Nvidia was positive. We saw that the stocks had a positive move up, and certainly for NASDAQ, that's great. So let's just see how it plays out today. Normally around about this time, 7:38 in the morning, we get Trump sort of tweeting furiously. So it's going to be quite interesting to see his reaction to that court decision yesterday. No doubt he's going to be absolutely steaming and furious. So that could give us some kind of reaction to that. Just quickly as well, I just want to have a quick look at oil. We have OPEC Plus kind of meeting. The main meeting is going to be on Saturday. when the decision makers sit down. It's still trading in this sort of, is this a sideways consolidation or is this some kind of bullish flag? As I said earlier, this did pop initially overnight on the news that there may be less tariffs, but as we can see, subsequently it's given that back a little bit. Oil again is conflicted about all of this tariff stuff, and also maybe more OPEC plus supply coming in. On the other hand, there's some talk that maybe Trump is going to be tougher on Russia, more sanctions on Russia, on Iran. So it's still at the moment. I'm just keeping an eye on this here, just still just sort of trading, just to put it on its moving averages as well. You can see it's just trading here, finding it difficult to get above this 50-day moving average, which for the moment seems to be the short-term kind of overhead resistance. Apart from that, we do have a little bit of data this morning. Whoops, sorry. Let's just go back and put that on the Bloomberg. We have initial jobless claims. Again, that's been very solid. There's no reason to expect the employment to have fallen off suddenly in the last week. As always, I like to look at the 4-week moving average. That's all very solid, about 230,000. That is indicative of a very, very strong labor market, so no problems there. What's expected today is actually 230,000. We do get second readings of some GDP. I don't think that's really going to be an issue. Possibly more core PCE tomorrow will be a bit more interesting. So let's just keep a look on that, unless there's some kind of crazy surprise, and this is very dramatically revised downwards or potentially upwards. So it is, it's a second reading for the first quarter, but technically it's quite backward-looking data at this point. All right, I'll leave it there, guys. When you get on with things, have a great day, and we'll keep the conversation going. Thank you.